Enjoy. Welcome to another edition of In Your Money. I'm Bryan Hirsch, and this evening we are focusing on the short-term insurance industry. With consumers stretched to make ends meet, one of the grudge purchases related to short-term insurance. Often I hear, I pay, and when I claim it's more of a hassle, as insurers do not really like to pay claims. Joining me this evening is Morag Dover, Director of Kapara Insurance Brokers. Morag, good evening, and good to have you on the show.
Well, thanks for having me, Bryan.
Yeah, Morag, many years, I mean, you and I have known each other 45 years, and the big item 45 years ago was IGI, we don't hassle, we pay. And everyone turned that around on its head and said, no, we hassle, we don't pay. But are insurers getting more and more difficult, and is the placement of cover become much harder?
Look, Bryan, I think the thought that insurance companies don't want to pay claims is actually false. Insurance companies want to pay claims, but in doing so, you have to comply with your wording. You have to comply with what the insurance company has requested at the time of taking out the product. The Ombudsman is there to protect you should an insurance company deny a claim and it's not thought to be acceptable in that deniability. But insurance companies want to pay claims. That's what they're there for. They're in the process of the business of paying claims. And you just have to comply with what the insurance company want. Read your policy wordings. No one ever reads a policy wordings, what the terms and conditions of your covers are. And if you don't read them, it comes as a shock when you have a claim. And when the company repudiates a claim because you haven't complied, then you get upset.
Morag, do you think policy wordings, the actual policy itself, has become easier to read? Because, I always say to someone, instead of taking a sleeping tablet, take a short-term insurance policy to bed, and you can read the policy, you'll be asleep within a minute or two.
In keeping with treating customers fairly, the insurance companies have designed the products to be much more available to be able to read, much more not technical. So it is easier to read. And normally on any policy, you will get a summary of the covers and the breakdown. So it is essential that you read because covers are different. Everyone thinks you get a cheap premium. That's great, your premium's so nice and cheap. But the cover is restricted because of that level of premium. So you have to look at what's right for you. It's easy to take out a nice cheap premium, and at the end, when a claim happens, then you have problems. So read your policy wording and make sure that you...
So Maureen, let's talk about terms and conditions. Yeah. Let's talk about, for example, because you've been in domestic most of your life. I mean, I know there's corporate work you're doing, there are a couple of corporate questions. But in the domestic world, the terms and conditions, llama warranties, safe and all that. I mean, are these now standard clauses in most policies?
Most policies. Look, the level of restriction will be different in some. Some may say anything that's worth 50,000 rand must be kept in a safe. Others will say it's 20,000. It just depends on the level that particular insurance company places on their limits. The one thing that people must be very careful of is the safe warranty. And it's not, insurance companies are not putting a safe warranty on the policy to protect you against an armed hold-up. We all know that in an armed hold-up, you will open a safe. Anyone holding a gun to your head says, where's your safe? You will open it up. And the insurance companies are aware of that. It's to stop the petty theft. It's to stop the workmen who come into your premises, who pick up something, put it in their pocket. So that's why you're asked to put things in a safe when you're not wearing them. So that's an important one. Alarm warranty as well is especially important.
And Morag, let's just talk about an alarm warranty, because I would imagine a lot of policies today, either in a gated area where maybe you don't need an alarm warranty, but in a freestanding home, alarm warranty. Now, what about load shedding, and if something goes wrong with your alarm and, that type of thing?
Yeah. Most insurance companies will look at it favourably that, you have a problem. But if you, for instance, you have an alarm warranty in your policy and your battery is gone, and it's been gone for months, and your alarm's has constantly not been put on, then the insurance company will possibly repudiate a claim. Whether they could actually do it and get away with the Ombudsman is debatable. But you must make sure that you have a backup, your alarm systems has a battery backup, and that you've taken every precaution. If you've taken every precaution, I've no doubt the insurance companies will come to the party.
And then you've got trackers in cars.
Trackers in cars, major drama at the moment. The instances of cars being stolen has gone dramatically. It's increased beyond what we could ever thought possible at the moment. And most insurance companies are asking for, if not one tracker, two. They will ask for a tracking device and a non-standard tracking device, especially in Ford Rangers, Land Cruisers, Pradas, those type of vehicles, which are very high theft risks.
And Maureen, whoever checks a tracker?
Oh, well, you're supposed to.
You know, I mean, the policyholder is meant to check that the tracker's working. But is there no responsibility and obligation on the tracking company to say, we know which cars are working, which cars aren't?
Well, it depends what you've signed with the tracking company. It's your contract with them. But your onus in most policies is that you check your device once a month, that it's actually operating, by setting it off and phoning the company and asking them if they're getting the signal. The problem with the tracking device, in any of these tracking devices, are because they have to be in the same place on a car because of the electrics, that when they're stolen, there's a very short period between the thieves removing that tracking device, because they invariably know where the tracking devices are installed. So there's a very short period, and that's why they ask for early morning, so that they can get that signal to the tracking company as soon as the vehicle's stolen, and not 2 hours later, because by that time it's too late, the tracking device is gone, it's been removed from the car.
Maura, your experience in motor claims and thefts, do these tracking devices actually work? Yes,
if they're caught early enough. As I say, if within half an hour, that tracking device has been removed from the car. So there are systems at the moment which aren't linked to the electrics of your car, which you can have installed, where it's done on a radio frequency rather than a satellite frequency. So those cannot be removed. Well, they can be removed, but they will keep signalling. And it's a much more effective way of tracking the car. So there are different ways of doing it. But it's something that the insurance companies are insisting on at the moment. As I say, not just one, but two tracking devices.
Well, Maura, don't you think that's a good idea? Because someone who's got an older car, take an older person who's got a car that's 8 or 9 or 10 years old, they're going to get very little from the insurance companies, and that car's worth everything to them because they only do little small journeys. So is it not advisable actually for the elderly who've got these older cars to actually put in a second tracking device to protect them? Because, you know, you'll have a car that you get paid, Toyota, 20,000 Rand, cost you 200,000 to replace.
You know, and it's very reasonable. Some of the tracking systems are very reasonable at the moment. You can do one for about 60, 70 Rand a month to protect your interests. As you say, you can't replace your car. Some of these cars may only have done 40 or 50,000 kilometres, but they're worth 20, 30,000 Rand. You can't replace them. So rather put the tracking device in just to be on the safe side.
So Maureen, let's just talk about now the problems with transport in South Africa, Transnet. And let's talk about the amount of goods now being transported on the road. So you've got a lot more vehicles on the road. Is that going to have any impact going forward on motor insurance premiums?
Not so much, other than there will be an increase in claims, and you will invariably find an increase in premiums. But the more risk will be in the goods and transit insurance for businesses, because that will invariably affect the cost of insurance for those companies, and that will be passed on to the consumer at some stage. So especially in the Natal roadwork, there's huge amounts of theft and looting going on, and the premiums are going through the roof for that type of cover. So that's why you will get the consumers being hit with that increased premiums.
So companies need to be aware, goods in transit, the importance of making sure that their cover is adequate. I mean, they have a first loss basis, most of them, but on that basis.
And invariably it's not enough, because it is an expensive insurance. So they may take a first loss of 400,000, but the goods that have been transported are 2 million. And if that happens regularly, then they really are going to suffer. Yeah.
So let's talk about a hot potato that's been in the insurance industry for years, and that's where so many people are uninsured. I mean, I think over 65% of South Africans don't have insurance. So if you're not at fault, you've got to pay in excess. The difficulty in recovering the excess. That must be, well, I can't say gives you grey hairs because you don't have any grey hairs, but it is a problem when clients have to pay that excess and you can't recover it.
That's the million-dollar question. The thought that the government may step in and do compulsory third-party insurance, which people tend to get confused with the third-party insurance, which is the RAF fund, which is purely for injury, not for damages to vehicles or property. I cannot see the government coming in with any additional. It's an additional tax that they've got no appetite for at the moment. And so that's why insurance premiums are so high. You say 65%, the estimate I have is 75. 75% of vehicles not insured. So if you have an accident, your insurance company has to bear the brunt of your damages, and it costs an increased premium. You've lost your excess. It's a very unhappy situation, because most companies overseas have compulsory third-party insurance, not here.
And then how does that affect your future premiums? You know, I talk about it at the end. Insurance companies don't like careless or unlucky people. But if you're unlucky and you get hit from behind, and now insurance companies can't recover because the person doesn't have insurance, how does that impact on your premiums going forward?
Oh, you've got to remember, it's not a no blame bonus, it's a no claim bonus. So whatever claim you may put in, whether it's your fault or not, will affect your premium, and you will lose your excess. Now, a lot of policies have excess buyback, which you can have, especially for people of a certain age, but it will affect you at some stage. They will increase your premium at renewal, at review stage. They will increase your premium.
Okay, so the one area I'm hearing all the time is cybercrime. Is there any insurance that one can buy, credit card, bank fraud, where, so many people, I mean, you hear all the time people being taken for a ride. The sophistication of these groups of people who are getting hold of people and getting into their banks and credit cards. Is there any form of insurance?
There is. There's add-ons, specifically on a domestic policy. You can add on cyber cover, which will cover you if someone attacks your bank account. But it's not going to cover you for minimal losses, for someone taking from your bank, but with your automatic teller card. But where someone attacks your bank account, there is cover. Of a minimal, that you don't get a huge amount of cover, but for a small premium, you can add it onto your domestic policy. If you want to go into the more sophisticated type cover, you can have phishing cover, you can have hacking cover, you can do all that. But it is a very select policy that you would have to apply for.
Maureen, recently there's been quite a lot of comments about motor insurance and all the conditions attached and all the difficulties in motor. Are you finding that presenting problems at claim time now? Are there any bits of advice you can give viewers of what they should be doing? I mean, think about your child turns 18 and drives your car. It's their car. It's insured on your policy. All these type of things.
How long have we got today? We've got a long time to discuss the problems. There's many problems that come into motor insurance. That's one of them. And people tend to forget that the insurance companies rate your premium as you as the driver. When your child drives that car, the risk is completely different, and the premium is completely different, and the excesses would be completely different. And therefore, the insurance companies take a very, very hard view if you do not tell them that you have a young person driving that car. Look, the occasional driving is fine, but if they're the regular driver, and the insurance companies do have a way of finding these things out, then they will have grounds to repudiate a claim. One of the problems we're having at the moment is second-hand parts. The Ombudsman has ruled, quite rightly, that on an older car, the insurance companies can replace it with second-hand parts. People are not very happy with hearing that their old bumper has been replaced by another old bumper instead of a brand new bumper on a 10-year-old car. And that's a problem. The insurance companies are perfectly within their rights. So, it's a case of what's cost effective for the insurance company. Also, where a car is under warranty, that should go to a recognised supplier who's regulated to repair that type of vehicle. So that's one thing that you've got to be careful of, that you're not going to a panel beater that will do repairs to your vehicle, but now your warranty is under question. So that you've got to be careful of. There are ways of reducing your premiums on cars. For instance, if you're only using your car on a limited mileage basis, tell your insurance company, they may reduce your premium. You can restrict driving to you and your spouse, but be careful, because if you do restrict your driving to a restricted driver basis and someone else drives the car, you can have a major problem when it comes to a claim. So things like that you can reduce your premium with.
Well, we're going to take a short break. When we come back, I'll deal with all the emails. Stay tuned and we'll be back shortly.